And welcome back. Demand for home loans decreased last week for the second consecutive week as average mortgage rates reach a 2.5-month high. However, though, that's not the full story though, because when looking at pre-pandemic levels for mortgage demand, it's on par with the lowest levels going back to early January 2015. I have a lot to share in today's video, but if you guys want a real estate agent referral, check out that link below, which is homeandmoney.com/Jason to get started today. And with that said, let's begin today's video. I have a really fun one to share with you guys today. So this is based on my weekly video I made for you guys regarding application numbers for home loans. This is from the MBA. Just posted on May 24th, which is today. Hope you guys appreciate these timely housing market updates. I actually love making these videos. Anyways, so for last week, the week ended May 19th, applications for home loans decreased by 4.6%. So compared to 1 week ago, applications decreased by 4.6%. Of course, applications includes refis, but also purchases as well. So the refi index decreased by 5% from the previous week and was down 44% from the same week 1 year ago. Based on their seasonally adjusted purchase index, which is an index which measures the amount of home loans that they're getting here, that decreased by 4% from 1 week ago, based on applications for home loans decreasing by 4% from 1 week ago. Also down by 30% compared to the same time frame 1 year ago. And also, as I mentioned at the very beginning of this video, this marks the second consecutive month in which their purchase index has actually gone down. And the current levels right now, when looking at pre-COVID levels, it's on par with approximately January 2015. The lowest levels going back to January 2015. And according to Joel Kahn, who is the MBA's Vice President and Deputy Chief Economist, he stated the following: applications decreased almost 5% last week as borrowers remained sensitive to higher rates. The 30-year fixed rate increased to 6.69%, the highest level since March this year. The MBA as well as Fannie Mae provide weekly updates regarding average rates on a weekly basis. So when looking at daily rates though, I actually like looking at Investopedia.com as well as the Mortgage News Daily. So today, the 10-year U.S. Treasury note, the yield has increased by about 4 basis points as of 4 p.m. Eastern Standard Time. The yield at approximately 3.7%. So a 4 basis point increase in the 10-year U.S. Treasury note, or the yield on that, which is causing average mortgage rates to also increase as well. So when the yield increases on the 10-year, it also causes mortgage rates to increase as well. So for example, according to Investopedia.com, as of today, look at this. Average rates for people with great credit, 7.45% for a 30-year fix as of today. Absolutely insane. Also, according to the Mortgage News Daily, let me just refresh this, make sure. Yeah, 6.98%, a small decrease of 3 basis points compared to yesterday when rates were at 7.01%. So 6.98%, 15 years at 6.27%, and FHA and VA is around 6.6%. Also, when looking at rates from 12 months ago, average rates are at 5.29% for a 30-year fix. That's an increase of 1.69 percentage points in the last 1 year. In addition to that, average rates have been more or less on an upward trajectory ever since early April, when rates were at 6.2%. Therefore, rates have increased approximately 80 basis points ever since early April this year, which could be one of the reasons why we're seeing a decrease of applications for home loans to buy houses. That's number one, but also due to a lack of houses for sale as well. If someone's on the fence looking on Redfin, Zillow, whatever, looking for a house to buy, if they don't see any options whatsoever, they may actually be less inclined to submit an application for a home loan versus if there was a ton of houses being listed for sale. If homebuyers saw a lot of options, then of course they'd be much more motivated in order to submit an application for home loan and then to write offers on properties, of course. Speaking of historically low inventory levels, have a look at this because this is altosresearch.com for the number of houses for sale nationwide. So for the week ended May 19th, there's approximately 424,000 houses for sale. This is far above last year's levels as well as 2020 this time, or 2021 this time. But at 424,000, this is approximately 54% less than pre-pandemic levels back in late May 2019. That's because back then there was approximately 931,000 houses for sale. This means compared to pre-pandemic levels right now, we're missing approximately 507,000 houses for sale, which is absolutely mind-blowing. Additionally, compared to June 1st of 2018, there's approximately 889,000 houses for sale. This means we have approximately 465,000 fewer houses for sale compared to the same time frame in 2018. So to briefly summarize this right here, because we're seeing a lack of houses for sale, historically speaking, and also because rates have increased to 2.5-month highs, those are two main reasons why home buying demand has been decreasing, as you can see by the data regarding application numbers in the US. That's two reasons, but here's a third reason for you guys. This is based on a new report from Redfin dated May 19th. It says there's only 4 major US metro areas in the US where it's cheaper to buy a house than to rent. They actually looked at the 50 most populous US metros, and only 4 metros they analyzed here. They noted where it's actually cheaper to rent than to buy a house. It says buying is more affordable than renting only in Detroit, Philadelphia, Cleveland, and Houston, Texas. The largest homeownership premium is actually in the Bay Area, where it's twice as expensive to buy than to rent a house in the Bay Area. Nationwide, the typical home costs an estimated 25% more per month to own than rent. And getting back to the MBA's report here, it says since rates have been so volatile and for sale inventory still scarce, in other words, a lack of houses for sale for existing houses, we have yet to see sustained growth in purchase applications. Refi activity, of course, remains limited, with the refi index falling to the lowest level in about 2 months and more than 40% below last year's pace. So regarding why mortgage rates have been increasing as of late, again, increasing from 6.49% as of May 11th, now has increased to about 7%. So the reason why we're seeing this increase in rates over the past several weeks is due to two main reasons, in my personal opinion, and also the MBA also touched on this as well. Regarding this uncertainty around the US debt ceiling, which at the time of filming this video on the 24th, has yet to come into a resolution on that. And also communication from several Federal Reserve officials last week. So regarding this communication from some of the officials from the Fed, Yahoo Finance reported on Monday that 2 Fed officials say that more interest rate hikes may be needed in order to cool prices, in order to decrease inflation. Regarding the debt ceiling issue, I actually have a note right here because the uncertainty around this debt ceiling, if the US defaults in their debt, this uncertainty is actually causing less confidence in the US abilities to pay off their debt. And their debt is one form of treasury bills, of course, right? Or treasury bonds. So when there's this uncertainty that the US may not be willing or may not be able to pay off their debt, that actually decreases confidence in those bonds, which actually causes prices of those to decrease. And because decreases in prices of those bonds, those actually causes the yield actually to increase. So there's this inverse relationship between bond prices and bond yields. So because bond prices have been going down, yields have been increasing. And because average mortgage rates are tied very directly to the changes in the US Treasury note, or the 10-year Treasury note, that's actually causing mortgage rates to increase last week. Joel Kahn also touched on this positive report we got regarding new home sales in the US. He says the housing market received positive data on new residential construction, which is seen as a key solution to the lack of housing inventory for existing houses. This is based on a report I posted in a video from 2 days ago because according to the U.S. Census Bureau, home sales for April increased by 4.1% compared to March of this year, and increased by 11.8% from April of 2022. So at 683,000, and by the way, that's a seasonally adjusted annualized rate for new single-family houses for April. So that pace of 683,000 is actually the highest sales pace since March 2022. And in my personal opinion, why we're seeing an increase of new home sales is due to the fact that we have this lack of houses for sale in the resale market, but of course because a lot of builders are offering incentives to home buyers in order to drive home sales. And those incentives that home builders are offering buyers right now is decreases in prices. On top of that, in many cases, they're offering free builder upgrades, such as free appliances, for example, and also in some cases as well, rate buy downs to decrease your average monthly housing payments. And for all those reasons, that's one reason why I believe why we're seeing an increase of new home sales in the US. And with that said, check out that link below if you guys want a real estate agent referral. Thank you so much for watching today's video. I appreciate you, and we'll see you on the next video.